What's good, YouTube? It's your boy Oscar, and I'm back again with another video. Yes, sir. In today's video, we finna be doing something like we finna be looking at gold. We finna be doing a market analysis of XAUUSD. We finna be doing it live. We finna be, and we're gonna be sending out a signal. You get? Because as y'all have noticed, gold has been going in an uptrend for a minute now, for like a couple of weeks. It's been going up. It's been shooting up. So if you want to catch those upward momentums with us or with me, then stay tuned. Log into this video and you might just catch this trade with me when I do catch it. Because, yeah. Anyway, guys, if you haven't hit that subscribe button, hit that subscribe button, hit that like button, go down to the comment section, comment down what you want me to post next, and then, yeah, just run up the like button. Just hit that like button. Share it to your friends and family because they might need it as much as you need this video. And yeah, guys, before we get into this video, I want to plug y'all with something very interesting. This is something y'all might like. If y'all are looking for like highly affordable electronics, then Elektros is giving out a coupon, not necessarily a coupon, but it has a 50% discount on their drone. I mean, you never get 50% discounts on drones. So Elektros is currently doing that at the moment, and it is actually kind of it's the orders are pumping in, guys. The orders are pumping in. So if you're looking for like the best electronics, highly affordable electronics, go down to the link in my description. It's written there, electros.wed2. Elektros are giving proper discounts on like most of their products. And if you want to be one of the lucky people to actually win a drone, because they're not just giving out a discount, you can actually be one of the lucky people who wins the drone. All you need to do is shop anything on the website, and you might stand a chance to win a drone. So yeah, guys, go run it up, order as much as you can. And we are on gold right now. We are on gold and we are looking for like buying opportunities. Why are we looking for buying opportunities? Okay, so what I want to do first is I want to start it here, right here at this blue line over here. I want to start analyzing from this point because this is the point that we were like, prices shot up. From there, prices shot up. So what do we first see? Looking at the previous market, what we see is that price had broken this recent high. I'm not using the premium version of 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 TradingView, so please bear with me. I can't like reverse my chart because I'm not using the premium version. I mean, the free version works perfectly fine, so I don't see why I should use the premium version. Okay, so now we can see we are in an uptrend. What we're gonna do is we're gonna start from here, from this circle over here. This is where we're gonna start. We're gonna start looking at price there. And let us go on the 1 hour so that we can see everything perfectly. We're just going to be using the 1 hour time frame. We're not entering other time frames because we are in a clear uptrend. We just want to buy low, sell high. But in this point, we are only going to be buying low. We're only going to be buying low. I'm going to calculate the amount of trades I take here and then how much risk to reward we have occupied. Okay, with this strategy, it is very simple. We're only using one tool. That tool, of course, comes with confirmations like lower time frame. You want to go on lower time frames to confirm it with like support and resistance or whatever you get. So like, but in this case, we are only testing this tool. We are only using this tool. No backup confirmations, no nothing. We are only using this tool. You get, and it is the Fibonacci retracement tool. So that is what we want to use right now. I want to select the Fibonacci retracement tool, starting from year to year. We only want to consider two levels, the 50% level or the 0.50 level, or the 60 and the 61.8% level, or 6.18. Yeah, 0.618. Yeah. that level. Okay, so now looking at this, we can see just by using the Fibonacci alone, we can see we have already caught a buy over here. Just by using the Fibonacci alone, we want to test. Put my stops just below the previous low. I have my levels there. I personally, I only use the, what is this? Personally, I only use, let's go for 1 to 2. You're going to be going for 1 to 2 risk to rewards. Okay, it's not perfect, but let us say it's a 1 to 2. Okay, so yeah, personally, nah, never mind. Okay, so now we want to look at the other level. Use our Fibonacci tool. I was saying, personally, I prefer to enter off the 61.8 level. You get? But if we have things like this, if we have this, price taps into the 50% level, and then what happens? It comes back. I said we are only using the Fibonacci level, but I'm showing you in these type of scenarios, like what I would do, what I would wait for. Price breaks there, comes back. It comes back on this level. Comes back on this level. After price hits that level, it goes up and breaks this level. Now this is where I want to look for my entries. It breaks this level. After price has broken this level, going on to the lower time frame, let us say the 15-minute time frame. I'm not going to go on lower time frames because I said I'm only using the 1 hour. But then if I were to go on lower time frames, this is how I would play it out. I would use the Fibonacci tool again. I would use it again to look for my trade setup. Yet I would wait for price to come here, and price hits the 50% level. That is where I would look to enter. Because remember, this is basically a break and retest. Basically, this is just a break and retest, like in basic terms. We have a break and retest. That is exactly what price is doing. So what I would do is I would enter here on this retest, after this candlestick. I would enter here, have my stops just below this low over here. I would below this low. It would be tight because remember, now we are just, then let us say we're going for 1 to 2. I usually go for 1 to 2.5s, but in this case, since we are only using the Fibonacci retracement tool, I will, yeah. But if we're scaling into like lower time frames and stuff, okay, so like, and then the next trade, we have this trade. What do you see next is this. Price continues to go up and then gives us this, this setup. This setup. Remember, guys, I told you I don't just go off of this trade, but in this case, I'm only giving an example of like Fibonacci retracement tool trades. You get? So like price retraced here, and then what happened? It gave us a long rejection candlestick. This candle is rejecting. It's rejecting after it hit the 61.80% level. That is where I become interested. And then what do we have next? We have this long imbalanced candlestick. We have a long imbalance over here, like this long candlestick. That is where I wanna enter my trades. But I wouldn't just go off and enter it like that. Remember, I said I have my own way of confirming my trades, and what I would see in this case is an inverse head and shoulder pattern. That is what I would see in this case, inverse head and shoulder pattern. We have our left shoulder, our head over here, and then our second shoulder. So this is where I would want to enter. This is where I would want to enter. Remember, guys, we are only looking for longs. We are only looking for buys. We are not trading anything other than a buy. You get? So as we see this candlestick rejection over here, this is my confirmation. I enter on one of these candlestick rejections on the support level. Have my stop below the previous low, which is the head. Have my stop below the head and go for 1 to 2. Remember, we are We don't necessarily have to aim for the previous high because we are in an uptrend. We know that price is going to break that high. You get, so you can aim higher than that because it is a fact. Price is going to break that high. We are in an uptrend. That is what's going to happen unless price reverses and the changes. But in this case, we know that price is going to break that high. We are in an uptrend overall. We get our 1 to 2 risk to reward. We continue looking for trades, and we see price comes from this, price reverses here. Okay, we see another level over here. That's what we want to do. We see another level over here. Price enters here. What happens when price enters here? It gives us a long candlestick rejection. Gives us a long candlestick rejection. But in this case, I need price to break here. This is where I need price to break because we have an imbalance. Price could just be filling out that imbalance and then falling down back to the downside. So we need price to break there and a strong break. So what do we see from that? We see this candlestick rejection. Normally I would wait for a retest, but in this case, I remember I entered here after that break. I entered after that break on that candlestick. Then I was a bit in drawdown. But normally I would wait for price to retest this level here. But I remember this trade. I remember taking this trade, and I remember that I didn't wait for that retest on this trade. I lacked a bit of discipline, but it worked in my way either way. But then I lacked a bit of discipline. You get, we go for a clean 1 to 2. I entered here, and I remember my stops were very, very tight. But remember, in this example, I'm not gonna use how I usually trade. We're just testing the Fibonacci retracement. But when I traded this, the stop was very, very tight, and I went for like a 1 to 5 risk to reward. That's how I remember this trade. I had like a 1 to 5 risk to reward. But in this case, we want to have our stops below that level or perhaps below that level there. Because remember, okay, let me just do this. If price were to reverse, we were just expecting it to fill the imbalance. We weren't expecting it to drop harder, like further than that. So let us just do this. Let us see our stop loss was here. And then let me like use the strategy properly. And then we go for like a 1 to 2. A 1 to 2, it was never going to reach our target. It was never going to reach our target. And remember, that's what happens in most cases. That's trading for you. That's what happens. But once price breaks this level, once it breaks this level, then you should move your stop. Your stop should go directly to break even. Once price breaks that level, your stop should be at break even. So basically, in terms of my example now, we didn't win this trade. In terms of my example, we basically just lost this trade. And then what do we see after that? We see price didn't, because like we were expecting price to come back down here, but it never actually did. It was just like tap, but that tap was highly important to us. What do we see here? How do we know that price is going to continue going to the upside? Because we felt like this was just a liquidity grab. Remember, we are in an overall uptrend. You get, on a 4-hour time frame. So how we saw this was a liquidity grab was that, I don't want to go on lower time frames, but some of my confirmations were on lower time frames. But we also had a confirmation here on the 1-hour time frame, which was this over here. We had price tap into this level, and we had like a consolidation which price broke. After price broke that consolidation, what happens after price breaks the box? It has to retest the box. So that is what we were looking for. We were looking for this retest, for price to retest here. We were looking for price to retest this level over here. Let me just do this. We were looking for a retest on this level. And then our confirmation, our entry level this time would be our Fibonacci 2. Again, I'm going to take it from the lowest point up until the highest point. What did price do? We had 3 confirmations. First confirmation, price came into our order block. Second confirmation, it's actually 4 confirmations. Second confirmation, it broke our consolidation to the upside. Third confirmation, it retested that consolidation box Fourth confirmation, it is in our Fibonacci retracement level. It is in the golden level. That is what they call it, the golden zone, the golden level. Third confirmation, we have this long candlestick rejection over here. That is when we start looking for buying positions. We have this long candlestick rejection. We enter there, stops below this level, and we go for 1 to 2. Personally, I never go for like 1 to 2 risk to rewards because I feel like, nah, I can't risk 50% to make 100%. I can't risk 50% like that. Yeah, I rather risk 30% to make 90%. Yeah, 30% to make 90%, which is like a 1 to 3, I think. I am not sure. I am not sure. Help me with the maths there because the math is not matching. But you can do the math and I'll make the money. You get. So yeah, that is what we had over there. And then looking at another trade, price continuing to the upside. What did we see? We see price breaking here, so we know that is where our Fibonacci tool is gonna end. You wanna so now we stretch our tool. We stretch our tool, and what do we see? We see price moving into the Fibonacci tool and giving us an what is this? An order block. It is giving us an order block. You want to enter after that engulfing candlestick because engulfing candlesticks are just they're highly important candlesticks because they show you the direction of the market. Every single engulfing candlestick has a story to tell. You get. So now we have an engulfing candlestick. That is our confirmation. You don't need a lot of that is our confirmation. It hit the 61.8 level. It is in the golden zone and we have an engulfing candle. So why wouldn't you want to enter? Yo, chat, my bad for that, my bad for that, my bad for that. My phone was tripping a bit. It wasn't tripping, I was actually out of space, so I had to like delete a couple of things. Yeah, anyway, as we were on the market, this was our risk to reward. We hit this, and then yeah. So now we want to look for another trade. We were talking about the engulfing candle. When price gives you an engulfing candle, it is a confirmation. Consider it a confirmation because it is a confirmation. It's not just any candlestick that was bored and decided to do what it does. Okay, next trade. What we're looking for is another retracement. Remember, we are trading off of Fibonacci retracement, off of the Fibonacci retracement tool. Okay, in this case, price never reached the 50% level. But if you're using the 3 level Fibonacci tool, then there's also a 38.2 level, I think, 38.2% level above the 50% level. And it probably hit that level. But I don't trade that level. I only trade the 50% and the 61.8% level. So if you are trading the 38.2 level then as well, then you would have gotten this trade. You would have entered and you would have made nice profits. But I don't trade that level, so I was never going to consider that trade. I only look for the 50% level and the 61.8% level, or in between. It's called the golden zone. That is our golden zone or the yellow zone. Whatever y'all feel comfortable in calling. Yeah. So like and then on this one, you wanna stretch our Fibonacci 2, take it high. What do we see? Price at the 61.8 level. Gave us a nice candlestick rejection over here. And then price retested that level, but I was never gonna wait for that retest. After seeing this candlestick here, it was more than enough for me to like wanna enter. You get it was more than enough for me to want to enter. But I don't think I caught this trade. I don't remember taking this trade. I will check my history, but I don't remember taking this trade though. I don't remember taking this trade. Because like there was never a confirmation on this trade. But if you are a greedy trader, let's say you are a greedy trader and you don't really look for too many confirmations and you feel like the 61.8% level is a good confirmation and this candlestick rejection is a good confirmation, you would have entered this trade here on the next candlestick open, have your stops below here, and you would have won this trade. But I don't recommend trading like that. If price doesn't get your confirmations, don't trade. Leave it alone. Abo, I don't recommend trading like this. I honestly don't recommend it. You get, or you could just wait for a confirmation. Just wait for a confirmation. which is gonna be something like this. This is what you wanna be doing. You're gonna draw another Fibonacci retracement level as price goes higher and drops. And then what you see is this. Now this is a better confirmation. This right here is a better confirmation. This is where you want to enter after price breaks these small levels of consolidation. You want to see price break those small levels of consolidation, and going into lower time frames, you will see that price actually retested that level. Price did retest that level. If you go on to like lower time frames, you want to wait for price to break here and close above, not just break. You want to see price break and close above that level. So after price breaks and closes above that level, you want to enter that trade. You're going to enter that trade, have your stops below here, and go for like a 1 to 2. 1 to 2 risk to reward, and you're done. Guys, it is simple as that. It is as simple as that. You go to the next trade. Go to the next trade. What do you see? See a Fibonacci retracement level. You look for your confirmations. What we would have done, we would have waited for price to break this level here. And then what happens? Price does break that level. It didn't really close above that level. But I did take that trade and I did lose that trade. I remember I took that trade and I did lose that trade. It was like one of my first losses after that upward momentum of gold. Because I've been on gold specifically. I'm talking about gold specifically. On gold specifically, it was like my first loss. Yeah, because I remember taking that trade. I waited for price to break above that order block level, and I entered around somewhere here. Price never closed above, and I think that is what made me lose because I didn't follow my trading rules properly. I was supposed to wait for price to close above that level. Price never closed above that level, and I took that trade, and I lost it. That is the fuck the bad part of not following your strategy. I lost that trade. It's cool. We move on. We now move. If it is like this, then you know for like, okay, price might be stretching itself. Now you want to go on the 4 hour time frame. I'm not gonna go on the 4 hour time frame, but when we do go on the 4 hour time frame, you will. There's this level over here. You wouldn't actually consider this level, but instead your Fibonacci retracement tool will begin here. This is where it will begin from the bottom up. From the bottom up. Literally from the bottom up. From the bottom up. And then what do we have here? I think this is a news candlestick. I think this is like news is being released during this candlestick. But we have a long candlestick rejection on the 61.8% level. First confirmation. Second confirmation, price breaks this level and this candle closes above that level, but it is too far away for us to want to enter. So what happens? Price retests to this level over here. I know I'm only supposed to be using the Fibonacci retracement tool, but I'm only showing you how you should also look for confirmations as well. This should be a confirmation you want to enter here. You want to enter after price has confirmed that buy, and then have your stops just below that level 1 to 2. Clean. You out. Done. You're out. Now what we're looking for is for price to reverse. For us to consider, we want to see this. I'm just going to show you. Once price breaks here, once it breaks this level, right now, once it breaks this level, next week, we're going to see something like this. If you take this, put it here to here. But this is a double top though. So it makes me ask myself a lot of questions. Is this the end of an uptrend, or is price still going to continue in this trend? Because what I'm seeing now here is that price is failing to break this high over here, unless price still continues to break it, and this Fibonacci is irrelevant. Because right now, this Fibonacci that I just placed now, it is irrelevant. It is only going to be relevant once price breaks this level. That is the only time it is irrelevant. Right now, that is the only time it is relevant. Right now, it is still irrelevant. Yet until it breaks that level. Once it breaks that level, then it is okay. It is a good Fibonacci retracement. It is a good retracement level. You get. But for now, this is just an example. You get. It is not valid. It is not valid. This Fibonacci level, it is not valid for now. You get. Until price breaks this level. Once price breaks this level to the downside, let me just do this. Once price breaks this level to the downside, then this tool is valid. That is when you want to start looking for price to fall into here and give us a confirmation. Then give us a confirmation. You get. But if price does break here, if price breaks this level, if price does break this level and happens to continue, guys, I don't, and I don't want to get out of this position because like I don't have the other arrow thingy that can bend. You get in my favorites thingy. I have to like fetch it there, and I don't want to fetch it there. I'm working with the favorites only. I'm only working with the favorites. You get me? So if price breaks here, if it breaks there and reverses right there, and reverses right there, let me just do this. And reverses right there, then what's going to happen? Our Fibonacci tool has to move. Our Fibonacci tool has to come here. We have to stretch it here. You see, this is why I say it's not valid up until it breaks that level. Because if it continues to the upside, then our Fibonacci tool has to move. You get, it has to move. So yeah, if it's like this, then we will have to move the Fibonacci tool, wait for it to come here. To avoid moving it multiple times and stuff, just wait for price to break a certain level before placing your Fibonacci tool. In the next video, I will show you how to like properly like place your Fibonacci tool, because some people have actually, like some of my friends, I have friends who like they don't know how to use the Fibonacci tool. They place it on the wrong levels. And with me, like I just look at it and I'm like, this is where it should be. You get, because I know I've been in this, I've been doing this for years. I know what I'm doing. You get. So yeah. In the next video, if you want me to show you how to use the Fibonacci tool properly without second guessing, is this the correct place to put your Fibonacci tool? Is this the correct place? If you want me to help you with that, then like this video, and yeah, just comment down below. Anyway, guys, we have reached the end of this video. Yes, sir. We have reached the end of this video, and we were happy to host y'all. I just hope that you are also happy to be here. You've gained information from this, and I hope you've gained a lot of value from this video, because that is the motion, providing value. That is what I want to do. I'm trying to provide value to you guys. And I haven't been uploading as much usually because like I've been busy. Remember, trading is not my only business. I have like other things to do. Yeah. I have like other businesses to handle. So like yeah, I've been quite busy. So I didn't really have the time to upload. But yeah, I probably will start uploading often from now. I don't know. I'll just see. I'll probably start uploading often. But yeah, guys, if you like this video, hit that like button, hit that subscribe button, go down to the comment section, comment down below what you want me to do next, and hit post notification. Don't forget to share this video to your friends and family. Yeah. Catch y'all on another one.